Good morning, traders. It is 8:07 a.m. Chicago time on Thursday, the 8th of September, 2022. Thanks for joining me. Sorry about the delay, just having some issues here. I'm having to start from my trading station at home, and my trading platform is again having some problems loading data. So trying to sort that out, but I do have other resources. This is episode number 2310. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, looking at the pre-market summary sheet, we have had so far until just moments ago, we had a completely and perfectly balanced profile in the overnight session. Yesterday, there's a lot to be said about yesterday, in that it finished with the point of control very, very prominent at 39.80 in the S&P, with an extension up across the board in most products, most U.S. equity products. The Nasdaq put in a high of 12,306 and put in a high of 12,332 overnight. S&P, same thing, pushed, and now we're reversing that. I want to caution you that ECB's Lagarde is currently speaking and is saying a lot since the ECB has finally made a move in interest rates by hiking 75 basis points and 25 basis points, 75 basis points on the lending rate. The lending rate and the deposit rates, 25 basis points. She is continuing to release remarks. In addition to that, we have Fed's Chair Powell due in about a minute to release remarks, which have been highly anticipated by the market. So this trader bite here is likely to experience some interruptions, in that there's likely to be a lot of movement. We have just sold off a fair amount. We've initiated away from balance at 39.80, and we're currently trading at 39.59 with a low of 57 in the S&P. So balance is turning into imbalance, and that's where we stand this morning. Anyway, so what's going on? That's basically it. The ECB finally hiked. She's speaking about being guarded about inflation. She's just said that the next rate hike might not be 75 basis points. That size is not the norm. Rates are not currently at neutral, indicating that it is the ECB is likely to raise rates again. It will take further hikes to get to neutral. And then, of course, again, we've got Jay Powell coming out here in a minute. So that's where that stands. In terms of the S&P, again, balance to imbalance, relatively heavy volume, 259,000 contracts, and the inventory used to be pretty much flat coming into this session, and currently the S&P has 39 points of range, 39.5 points of range, with the overnight point of control on top of yesterday's point of control, indicating complete balance. And so that's where we stand. So Powell's been speaking for 5 minutes. Live link to, I'm not seeing that. Yeah, he was scheduled for 9:10. It is 9:11 currently. And yeah, that makes sense. The market dumping on that. I just haven't been paying close attention. I'm not seeing Fed's Powell. I see. Yeah, looks like Powell has been commenting. Looks like he came on a little bit early. Yes. Anyway, in my preparation here, I didn't listen in on what he's saying, but I can see the impact. We're back at 39.50 in the S&P. For today, we have Fed's Powell, ECB's macro projections. Lagarde speaks at 10:15 again. We have the crude oil inventories from the EIA, gasoline inventories. We have a big number tonight, the inflation rate out of China at 9:30 Eastern, and that's where we stand. So let's move on. Yesterday, I want to speak about yesterday for a moment here. Yesterday, I don't know if you guys have heard me before, but I've talked about the Monty Hall, problem. And yesterday was one of those days where I have to kind of pull this and dust off this old analogy with the Monty Hall problem from that game. Yesterday, all indications, as discussed, are for a bearish move down, expecting lower highs in the S&P, expected it to push to 38.50, and expected it to be wide open all the way down to 38.20 beyond there, and I was quite confident that that's what the market was indicating. The fact that yesterday it consolidated and then turned up is a very strong indication of that other door. In other words, we have three doors. There's a grand prize behind one. There's a small prize behind the other, and there's a goat behind the third. Nobody wants the goat. I don't know. Goats are kind of cool, but nobody wants them. And so you have a 1 in 3 chance, of winning that grand prize. It's behind one of three doors. And to make matters interesting, the Monty Hall then tells the contestant that there is that their prize is not behind one of those doors, taking out 1/3 probability, giving you an opportunity to change. And then they ask you, do you want to change? You select a door. He tells you which door does not have a prize behind it. He gives you an opportunity, and the idea is that now he's eliminated 1/3 of the 3/3 and asks if you want to change, and the statistics indicate that you always change because you are betting on a 1/3 probability. People see that, okay, one door has been eliminated, now it's 50-50 chance. It is not a 50-50 chance. It is actually still a 1/3 probability for one and 2/3 probability for the other, so you always change your guess because he's never going to pick the door with the prize in it. So now you have a 2/3 probability of winning by changing. Now, how does this tie into what the market did yesterday? Here's what the market did. Let me check to see if my platform actually caught up. It did, yes. Fabulous. So how does this tie into Monty Hall? The way this ties into Monty Hall is we expected with high confidence that we would put in a lower high and move lower. So lower high, big sell-off, consolidation. We did extend. We did have an impulse. We had an extension. And then yesterday, so we had an extension on Tuesday. And then yesterday we expected this thing, given the way it was set up with the point of control in line with the prior session, we expect this thing to continue lower. When it doesn't continue lower, this is new and very, very important information that's coming in. We don't want to sit there and continue to think the sell side, because that's what we want to see. That's what we prepared our mind for. So we want to then immediately take advantage of the fact that everybody who's monitoring trend and so on is probably going to be going in the same direction. And so when we see something that refutes it, it makes now we have that Monty Hall problem where the probabilities are 2/3 on our side versus 1/3. And so the idea is to be, as a trader, the day trader, is to very quickly change your bias and take advantage of the fact that this squeeze is likely to continue. So we did squeeze, we pushed to 39.40, we had a reaction at 39.40 in the 39.40 area, and then we actually went a lot farther than expected with a point of control and some heavy trading going on to 39.80. This morning we set up balance on top of the 39.80. The point of control overnight's right up here at 39.82. 50.75, 39.82.75. We had pretty good balance. We pushed the overnight high. So check, 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 check. So these things check off all of the pieces. And then, of course, Powell comes in here and throws a wrench in it and pulls us back. Support based on yesterday's action, 39.60. A lot to be done here, and we know that there's quite a bit that was trading in that zone there. The 39.64 traded heavy. You see that ledge right here. 39.64, 39.60 are key areas for expected support. And what this is doing, we are inside of yesterday's range. If you look at yesterday's profile, we have a price discovery profile. There's no balance. This is a balanced profile here. This is actually very choppy balance. A lot of price discovery here. This is what balance looks like. A very even distribution. It doesn't have to be perfectly centered, but we want to see taper at the top, taper at the bottom, telling us that the market's accepting the middle and is trading quite a bit there. Yesterday was a trend day that finished near highs with the point of control near the highs. So we expect in the RTH session, we do expect participants to take that high out. We expect that 39.8875 to be taken out at some point during the session, historically speaking. This was geared up for this. We were set up to do this with balance at the highs. My expectation today is we are likely to visit the 4,000 and start moving towards canceling this entire sell-off from last Friday by moving back to 40.15, and then that sets us up for a retest of the 40.1950 or the 40.20, which was Friday's high. This is how I came into this morning. Now this thing has changed a little bit and is moving towards yesterday's mid, and this 39.50 mid-century figure, it throws a wrench in things and makes things a little bit more obscure. So here's how things are shaking out in terms of the auction yesterday. We took out most of Friday's weak structures. Again, the shaded areas that you see here are what are called single prints. Let me know if you don't know what single prints are. You can, of course, easily look that up online on Google. But yesterday we did leave some single prints behind, but not as dramatically weak as they were last Friday, and we repaired some of that. So we opened near the low and we finished near the high. Yesterday can be seen as a reversal day, and now we're pulling back right into this area right down here. So I'm expecting pretty decent support into the 39.50, the 39.48 zone, and that sets up the first trade of the day for me. But what we've done is, we started one-time framing down. We triggered one-time framing down with yesterday's open. That was what was expected, and then we immediately canceled it. The current one-time framing in the S&P is neutral. We do have a trend down on the weekly, but on the daily there's a fight going on here, and we could see that there's a bit of quite a bit of trading that's taking place over here. So you can see here what has happened. This is an overlapping profile, so we're going to jam it to the right, and you can see that there's a fair, despite the data, there's a fair amount of support below us now, starting in that 39.40 area and so on. So as this thing pushes down into 48, 45 or so, I'm expecting that participants would likely step in and support it. Let's get the profiles up on here. So that's what we have. So this morning, high, lower high, lower high, and then it finally gave in. We've got some separation to the mid and VWAP. We've got some separation to the overnight point of control, but we're still inside of the prior range. So what does that mean? That is likely to indicate that the morning trade this morning, the market is tipping out of balance within the range. So we're expecting wide rotations this morning. Okay, so we're looking for a pretty aggressive two-way action. You can see the big lot bubbles here. See the big lot bubbles? This is what we expect as we come into support. This doesn't mean it'll turn here, but it is very commonly, forget the one, this one here is at the close. There are going to be, at the close, there are always going to be big bubbles. But the big lot trades here, as it drops, this is my first order flow indication that there's a responsive, or there's the opposite side is coming into play, and where we might see it slow down. It doesn't mean it'll stop, but we might see it slow down as it comes into a predefined area of support. In this case, the 48 to 45 is what I'm expecting for this morning. So the first trade of the day, the first trade of the morning is the overnight stat. So we expect it to take out the low. I'm expecting it to push lower. Not going to do anything with that. Let's draw it on here. So this morning, the first trade of the day, expected to be in range. We're trading in range. I'm expecting it to squeeze that low into the 48 to 45. 48 to 45. And I'm expecting a reaction back to the open, and for it to push into this zone right in here. That's supposed to be a line, not that ellipse. So I'm expecting it to push back from the 48 to 45 to about 75, consolidate, and then we have the internal gap to settle trade back to 39.80, nirvana at 39.80 before we squeeze the prior high into the close. Yesterday was a reversal day. If yesterday takes back a good chunk of Friday, if it continues higher from here, then we should expect that Friday's point of control would be in play. Where's Friday's point of control? Do you guys remember? I said it earlier. Let's see if you're really, really listening. What is the key target above if we continue higher? Does anybody know? Let me do the second scenario while you guys are thinking about that one, but make sure you give me the right answer, because it's really important to know what your price map is and what the key test areas above and below are, so that when you do get into those trades, you're hanging on and you're letting it play. All right, we're getting some answers. There's a delay, but we're getting some answers. 40.20, that's the key high that we would test. That's the other side of it. Remember, 40.1950 is as good as it got on Friday, but it's 40.15. 40.15 is the number I'm looking for. 40.15 brings us back into complete balance with what we did last Friday. So the key target above, the next key balance area above is 40.15. I'm going to put a box around it, okay? And I'm going to just circle it so that we can come back to it. That would be the extended target from 48 to 40.15. That's a lot of range. That's a lot of range to the upside on the buy side. So I'm not expecting us to hit it today. But if we continue higher and we take back all of Friday's sell-off, that's where we would be going. Okay? That's a market that is climbing a wall of worries. The secondary scenario, open auction, that gets responsive immediately, pushes back to that 39.70, so the 70, 75. Impulses back down to the open, consolidates, and then starts actually destroying the weak longs from yesterday. So we would end up with a long liquidation profile, and it starts to move below the 45. If it moves below the 45, we expect acceleration into the 20 again. Okay, so this can be very fast once it gives up the 45. Okay, so there's support here, potential support here, but really it is likely to fall right through into the 20 area again. So that would be scenario 2. Test the 70, 75 area, fall back, extends the overnight low. But if it takes out the 48.45, I'm going to be looking to hold tight, looking for that 39.20, giving us at least 25-30 points of range. This is what I'm looking at. These are the two main ideas, key elements. We reversed Friday's sell-off, so Friday sold off. Yesterday we pulled back. We couldn't quite get to the full point of control of Friday. So again, let's go to this relative chart. There's your Friday. There's your Friday. This is yesterday. This is more than a 50% pullback. We pushed up against we built a point of control at 39.80. We settled right on 39.80, so this is just a sweet spot. And now we're moving away from it. We're moving away from it. I'm expecting us to come back to the sweet spot this morning one way or another. But if we don't and we start to sell below the 45 here, it's very quick that we would get back to the 39.20. See how that plays? Okay, so we'll see how that goes. Hopefully you gain something. Sorry about the late start and the market's open. Good luck, and I'll catch you tomorrow morning. Take care.